Thanks for staying with us, everyone. Now, China is accusing the White House of bullying practices after Donald Trump imposed 104% duties on Chinese goods into the U.S. The duties on China kicked in after Beijing refused to meet Trump's deadline to withdraw its own retaliatory levies on the U.S. Now, China says it will raise its tariff on U.S. goods to 84%, retaliating to the hefty new tariffs on its imports that kicked in today. Now, China's exports to the U.S. amount to 2% of its total economic activity, and the message from Beijing is they can ride this out. Now, steeper tariffs on 60 countries, which Trump deems the worst offenders on trade, also came into effect today. Trump says impacted countries are calling in a bid to negotiate, as experts warn tariffs could increase prices. Meanwhile, European stocks have dropped and major Asian markets have extended their losses. Investors are selling via long-term U.S. government bonds, traditionally considered a safe haven asset. Well, the IMF has cautioned that several African nations may seek financial assistance from the fund due to the adverse effects of President Donald Trump's tariff hikes on their economies. Abebe Emro Selassie, director of the IMF's African department, made this announcement during a meeting in Senegal. Meanwhile, IMF Managing Director Kristalina Georgieva has expressed concern about the broader long-term impact of these tariffs on the global economy. Listen.
What we do worry about is the absorptive capacity of economies to any further shocks. When I became managing director just before COVID, countries had fiscal space, abundant, many of them. They had monetary policy space. All of this is gone. What do they have? Majority of the countries have high level of debt. So if we tamper with the process of disinflation, if it stalls any further, if inflation expectations get somewhat de-anchored, then interest rates will stay where they are. You know, God forbids any movement upward. And that at the time when countries need to refinance, many of them, they need to refinance their debt under higher interest rate conditions. Yes, financial conditions remain accommodative now. Will they stay that way is to be seen. So what is the moral of the story? It is twofold. One, the sooner there is more clarity, the better, because uncertainty, our research shows, the longer it goes, the more it may negatively impact growth. And two, for countries that have been kind of playing with the idea of structural reforms, more pro-growth reforms, but have been slow to implement, slow no more. Focus on getting your economy in good place now.
IMF boss there. Well, joining me on Zoom is Nelson Kujo-Kwagwaji, who is head of finance at UMB Capital. Good afternoon to you. How seriously should we take the warning from the IMF about the impact of the tariff war on the global economy and the potential of African countries seeking financial assistance from the fund in the near future?
All right, thank you very much, Darryl, for having me. I think I totally and perfectly agree with the Director General of the International Monetary Fund. You see, the tariff mechanism that is being implemented in the U.S. is a protectionist mechanism that is aimed at protecting the interests of the local manufacturing industries in the United States. However, considering the might of the U.S. within the global scheme of things, that is going to impact negatively on the global economy. You rightly mentioned that one is going to slow down the growth of the global economy, and also you said that it's going to engender retaliatory measures from other African countries. And as I said, I perfectly agree and I concur with the Director General that most African countries may end up seeking financial and technical support from the IMF as a result of the imposition, because one, their export revenue will drastically be reduced. Okay, every country every year exports to the US or export outside the jurisdiction of their country with the aim of earning, foreign, revenue, and that is going to stop because once the tariff are being imposed on your product, it's going to make the product less competitive in the US, market, and that is going to create a fiscal gap within the Ghanaian, within the African context. And once the fiscal gap is created, the African countries might look for other sustainable ways of financing the deficit. And so the presumption that in the medium to long term, African countries may seek financial and technical support from the IMF is entirely true, and I side with that assertion.
Yeah, well, so far, the government says it's going to pursue a diplomatic channel to get the US to reconsider the tariffs. We know that the AGOA initiative is going to be affected by the imposition of the 10% tariffs. How would you assess a government's response to the US so far? Of course, we don't have the guts to retaliate, do we?
Yes, yes, it's true. In fact, when you look at Article 33 of the UN Charter, one of the Pacific dispute resolution mechanism is negotiation. I think the step taken by the government of Ghana to have a meeting with the US ambassador to Ghana is a step in the right direction. For instance, when you go to Zimbabwe, the US government imposed 18% on products that are coming from Zimbabwe into their market. However, Zimbabwe have decided to lift or entirely take away all taxes that they have imposed on US products that are coming into the Zimbabwean market. I think that going beyond meeting with the US ambassador and having negotiation with him, I think we should also look at some of the tariffs that we impose on imports that are coming from the US market. Because in Ghana, we don't have the financial muscle, we don't have the financial strength to impose a harsher and harder tariffs on the US products that are coming into our market. And so I believe that negotiation and the diplomatic means being used by the government to engage, the US ambassador regarding the tariff imposition is a step in the right direction. However, going forward, we should really look at all the tariffs that we have imposed on products that are coming from the US into the Ghanaian market and see how best we can rebalance so that we can have a good working and trade relation with the United States.
Well, the advice from the IMF boss to nations is to put their economies in good place. And she says it's a matter of urgency. What can Ghana do now? How do we put our economy in good place?
Well, I think Ghana, we have to diversify our export market in the first place. In fact, as at the end of 2024, per data released by the Ghana Statistical Service, our total volume of trade with the US was $2.1 billion. Okay, and even that, US is not part of the top 5 destinations of our exports. So I think that we need to diversify our export market by couching for market within the European Union, and also China. We can destinate most of our export to China and the European market. And also we need to take advantage of the African Continental Free Trade Area. Now the AFTA is a free trade area that aims at promoting intra-African trade. The AFTA is a free trade area with 55 countries, about 8 regional economic communities, and about 1.5 billion people within the African continent. So I think that we must do more of intra-African trade. We must boost trade within the African countries. Don't forget, the produce that we do in Ghana can be consumed in Sierra Leone, can be consumed in Nigeria because of our cultural similarities. And so promoting of intra-African trade is the best bet going forward in order to shield ourselves from the shocks of this import tariff imposition by the US.
Right. Well, you have my final question, you have a background in international trade law. I'm just wondering, where's all this going? You tariff me, I tariff you. At what point do countries say, wait, let's stop, this is going nowhere? And isn't there anybody watching over it like a big brother?
Now, you know that Yes, international trade is regulated by the WTO, International Trade Organization. And so there are mechanisms and procedures that
which the US has pulled out, I should add.
Yes. And so countries must follow strictly the procedures set up by the WTO when they are imposing tariffs on each other. Now, the imposition of tariffs by the US on all these countries, one, these countries will also bring on board tariffs that is going to affect the economy of the United States. Don't forget, US cannot joke with an economy such as China. And so once China is retaliating, it is going to make products of US in the Chinese market very expensive. And that is going to distort the international supply chain process. So I think that there should always be a meeting point. There should always be a point where the global economy will come together and say, hey, we cannot continue with this because it is going to affect supply chain distribution. It is going to slow down the global growth, and it's even going to engender global inflationary pressures. Don't forget that once export from one country to the other or import from one country to the other is expensive, most African countries will be importing inflation into their various jurisdictions, and that is going to distort whatever fiscal strategy they have for the year. And so if we continue to import from a country where the prices of goods and services in that countries are very high, we are going to bring in imported inflation, and that is going to distort our domestic target for the 2025 fiscal year and even going ahead. So I think that the WTO procedures should be respected so that countries cannot unilaterally stand up and impose sanctions and tariffs on other countries just to protect their domestic economies.
Yeah, with the US out though, I'm just wondering if that's a thing. But we'll keep watching, see how that goes. Head of Finance at UMB Capital, Nelson Kujo-Kwagweji there. Thank you so much for joining us on the marketplace. I appreciate your time with us. Now, the Ghana Association of Banks has expressed concern about the potential impact of the US tariffs. Here's my conversation with Chief Executive Officer Yonewa. Thank you for being on the marketplace. I want us to talk about the US tariffs. As banks about the US tariffs, known as the Trump tariffs. How do these global tariffs typically affect Ghana's banking sector? Is there any cause for concern?
Yes, there is definitely cause for concern. To the extent that as a country, we do not have the requisite size to be able to retaliate in like measure to the 10% that the United States has imposed on Ghana's exports. As banks, we exist in the economy and we facilitate trade. And if your exporters are struggling, and it means as a banker or as a bank that finance that exporter, potentially you have some challenges even if you have given or funded their operations. The unfortunate thing is because our scale of production is so low, our average cost of production is not necessarily low. So when we export, we are not, even at the baseline, we are not very competitive. And if your exports are going to be layered with additional taxes, then offshore, you are even more uncompetitive. Here we are as Ghana and also as Africa, with a GDP of $2.8 trillion in Africa, Ghana of GDP of about 75 billion. We are going to sit down and negotiate for a country of about 30 trillion GDP, United States. It's definitely a tough, something to ask. So as banks, all we will ask for is for the government to engage diplomatically and see what is possible. And also as Africa, it calls for closing of ranks for us to have a united negotiation front when it comes to matters of international trade. Because there's no way Ghana can face the United States on any kind of trade matter. Whatever they do is something they lay on the plate for you. It's not something you demand because your leverage is very low.
Yeah, I'm just curious, are there any specific areas that banks are exposed to, sectors of the economy that are affected by the imposition of these Trump tariffs?
So, I don't know whether this affects the AGOA.
Well, we're told today that AGOA is going to be affected, 10% tariff imposed on.
So obviously, if you're a bank and you are facilitating AGOA in textiles and other allied products under the AGOA program, the thing about tariff is it doesn't affect the exporting country in terms of ability to export, but it makes you uncompetitive offshore. So if AGOA, people were buying Ghana garments, Ghana clothing because of the price and because it's coming under tax-free, quota-free, and all of a sudden there's a layer of cost. These are reasonable consumers. They will begin comparing again, and if it's being produced in America cheaply, then it means your exports may be sitting on the shelf longer than your past experience. And if you have taken a facility, the more it sits on the shelf, the potential danger you are posing to your bankers, because your ability to service your obligations as they fall due will now be hampered. So this potentially could transfer. Already we have a non-performing loan regime which doesn't augur well for financial intermediation. And if this becomes another layer of frustrating the performance of customers, or particularly the exporting community, obviously is going to have an impact on the banks. And again, let us not just see exports. As tariffs are layered on almost every country that is exporting to the United States, the potential rippling unintended impact is that those countries will be looking for other territories to dump their goods, because they have the production capacity, and that capacity must be utilized. So then they will come to Ghana. Even if their mind was not in Ghana, they will begin looking at Ghana, and we are potentially going to have dumping, where products that otherwise would have gone to the US find their way in Ghana. And what that does to us, then we are unable to even do the little kind of production that we do here to meet our own demand. So it has very far-reaching implications for exporters and for the economy generally, if you look at it in totality.
Yeah, of course, we can talk about currency, we can talk about inflation and what that does to lending rates.
Yes.
I just also wanted to find out, so are banks having to now rethink their approach to trade financing? Is it too early to start,
I think it's too early. Obviously, we are all watching the space. We've heard the Minister of Trade, and we're watching what the government response is going to be. We are not thinking in the way of China or European Union or Canada, where there's reciprocal tariff imposition. I do not think we have that kind of leverage to be able to do that. So we are watching the space, and risk as banks. We are always on the lookout for risk factors, and if this becomes an elevated risk on a certain parameter, of course, banks will begin looking at their risk regime to see if they have to tweak a few things here and there.
Yeah, I was also going to ask, how do you manage those risks? I don't know if it's early days yet, but I'm sure you're just going to be monitoring the things as they go.
Yes.
Thank you so much, John Ewuah, Chief Executive, Ghana Association of Banks. All right, another conversation with John Ewuah, the Chief Executive of the Ghana Association of Banks. We've got our eyes on oil this afternoon as well. Crude oil has sunk to a 4-year low as intensifying trade war endangered energy demand with a fresh wave of U.S. and Chinese levies menacing the global economy. Brent futures slipped below $60 a barrel for the first time since 2021. The sharp decline in global crude oil prices might be welcomed by some, particularly due to its potential to lower fuel prices at the pumps. However, on the flip side, this could lead to significant challenges for the country's revenue, a situation that should raise concerns for the finance minister. George Affe reports.
Government in the 2025 budget is hoping to get more than $1 billion in revenue from crude exports for this year. Now, that is based on the benchmark price per barrel of $78. However, looking at what is happening to crude oil on the international market, now dropping to about $61, a lot of industry persons are worried about the impact of this development on government projected revenue by the end of this year as captured in the 2025 budget. This is because several analysts are projecting that because the decline in crude prices are based on demand and fears of the global economy going into a recession, prices could be going down further. But at a time that the country could be hit with some losses in earnings from non-traditional exports because of the import tariff hikes introduced by the U.S. government, this is the last thing that the country could be thinking about. Others have argued that Ghana can be compensated on the other side because this could lead to fuel prices at the pumps going down in Ghana here. And that could also impact on inflation levels and possibly help with the stability of the Ghana cedi.
Welcome to Let's Talk Tech. Following the repeal of the mobile money levy, some banks have introduced new fees for bank-to-mobile money transfers, marking a significant shift in the landscape of digital transactions. Lead for Eyes of Africa, Henry Kobler, joins me on Zoom to discuss. What more are you hearing, Henry?
Thank you very much, Daryl. So, personally, I've had that experience on trying to move money from my bank account to my personalized mobile money account. And I had then realized that a few of the banks, really the ones I use, really had new tariffs which had been introduced on there. I think that before the e-levies, there were that fees that were on if you had to move money from your mobile money account to your bank, and then same as moving from bank to mobile money. But again, that had been taking off, and so it really made it seamless. I think it's one of the most used channels if you're looking at transfers of funding from banking to mobile money to banking as well. Yeah. But again, away from the e-levy, I think the new fees have been pushed into by some of the banks, and that is becoming a very worrying trend.
Yeah. Well, how does this impact the adoption of mobile money services? What new challenges with this present?
I think one of the most important arguments we were making when it came down to e-levies was that we really wanted to be able to move monies which you legitimately earned around, again, even in your personal account. And so to be able to be moving money from your own mobile money account to bank and same back was one of the most used applications. I think that has been almost about 80% of the kind of transactions I've been doing, especially on my banking app. And so really looking at putting up a cost. I had done almost about 18 transactions yesterday alone, and I can tell you the fees really was a bit crazy. And it's really going to start crippling down on most of these the mobile money adoptions that we're sort of pushing. Again, we looked at the bank as a safe haven where people could move money, and then the adoption of digital technology and financial technologies being up in there. I'm thinking that this is actually a decision that we're not really looking into and talking about.
I have barely 30 seconds, Henry. I want to ask you this because we'll be going for, or if we do have the feed, we'll be taking live a press conference by the communications minister. We understand that a second registration of SIM cards is set for June this year. Your thoughts about this?
Yeah, I think it's long overdue. It's something that we've been looking towards for it. My response really would be that we're also looking at a very comprehensive plan in the digital space and the digital financial space as well, and connecting all of that together. So it really wouldn't have just been the SIM card registrations. We're looking at a very comprehensive part, the GPS as well, and all the platforms that are all there, the Ghana.gov. We're looking at all the comprehensive plan in midterm to roll out. But I think it's a very long overdue process, and we're waiting for that.
All right. Good to see you, Henry Kobler, lead for Eyes of Africa, joining us for Let's Talk Tech. That's it for the marketplace. Thanks for joining us, everyone. More news on our website, myjoyonline.com/business. The day's latest stories over there. And that's our program. Thanks for watching.